Welcome to Insights. I'm Eric. I'd like to talk about Apple today, do an Apple review. Apple's been one of the market leaders, and it's carried the S&P 500 and the NASDAQ 100 higher. It's part of the growth names, part of the FANG. It's been up for 22 months and produced 150% return over that time. But we're seeing a subtle transition of the composite trend here. The daily trend is now down relative to the up weekly and up monthly, which is the secondary and primary trends. The primary trend is still the most important. It's up. It's if we know anything about the cycles, this is the price cycle. It's still below zero. So the 150% is still below the normal up impulse. The time cycle is a little bit above the mean. So at 22 months or just under a year, the rally is a little bit more than it normally produces within a standardized or an average primary trend impulse. So the real question is the trend falling out of alignment, is that a concern? Is it a warning for the stock market? Well, we don't really know any of the answers to that other than the fact that the Apple represents a large chunk of the S&P 500 in terms of market capitalization. It also is heavily owned by everyone. So if it starts to deteriorate across the board and flips the primary trend, we're going to feel it in other areas of the market. We can see the primary trend looks like this. This is the monthly trend. The green boxes shade the up impulses. We can see this in the NASDAQ 100 in the standard subscriber matrix. This is the company specific one that's not accessible, but I do update it for the subscribers. This green box is still in place. It hasn't turned, so we're safe for now until these blue and dark red lines fall below the zero line. The weekly is deteriorating a little bit faster. It's getting close to the zero line. It's much closer than the weekly, but we still have a solid box. Now this could be one whole box here minus this little sliver. So this if this was considered one whole box, this could be in greater jeopardy. Now this was a much longer rally here, but we'll see. If this breaks below, it does change the equation. It would represent a much deeper correction than just the daily. It is the daily that's just been knocked out. We could get a small correction like we have here, these unshaded regions. This is a slightly bigger one, and this is a bigger one. This is multiple week, probably multiple month decline that infects and shows up in the weekly like these areas here. So you have to be careful that this thing doesn't expand. For now, it's out of consolidation. This is not a play to chase. You would have to wait for this to come back above the zero line for the Apple to reset, to restore triple alignment. And that we don't know whether it's going to happen and when it's going to happen. We do know that the professionals have been selling hard, and they've been selling hard since this point right here. Now the Apple has made a new high, but professionals stopped buying and stopped chasing long before this high was made, creating a negative divergence which is weighing on price while the public has been aggressive buyers the whole time. Series of higher highs and higher lows. And a lot of public participation. The pros stopped right here, and actually the pros are breaking down the swing lows, selling. There's more selling to even come. This makes the current decline even more volatile and worrisome. Price could actually drop here lower than we have as long as this continues to generate new lows. So we're going to keep a close eye on the Pro Index relative to price. If it continues to expand, this correction's not over. And this correction could expand even more into, in fact, the weekly and even the primary trend. This gives us an idea of how far the correction can go. There's a near-term support at this first green line. The dark green line represents an area that price might actually come down and challenge, and there's much lower lows that they're less likely to be challenged, but there are some zones within the weekly and monthly reversals that stand out where price is likely to challenge during at least even this daily correction, and we're going to check that out before we close this review out. In the weekly section, and this is also found in the regular matrix that doesn't include companies, The weekly gaps are the ones that change the most often, and we can see that the 117, 118 is a logical support area. This matches up with a weekly gap that's found in the monthly zone too. So this is the first line in the sand, this is the next line in the sand, and I think this is going to be the important zone to hold. If price breaks through this zone, the correction is going to deepen, and it's going to most likely infect the weekly, and it runs a really good chance of flipping the primary trend. So we're going to keep an eye on that, and I think that's the setup for Apple. Apple is a market leader, but it's definitely deteriorating and it's definitely weakening. So let's not focus on what could happen. We'll just follow what's happening, and we'll play it by that. I will update this for subscribers if this deteriorates any further than what we've talked about. For now, I'm going to put this one out there in the open space and let people introduce themselves to the multidimensional definition of the trend. There's a simultaneous up alignment between the daily, weekly, and monthly, and they cannot be altered by our own opinions. Our own opinions see what we want to see, but the computer focuses on all three at the same time to define what is. That's the whole point of the evolution of the trade, and that's the whole point, is to take self out of trading. If you have any questions about the trade or Apple or even any of the setups or even the reversal zones that we see, contact me. There's some links below the video. It brings you back to the blog, and you can contact me there. Leave some comments under the video. If you like the video, subscribe to the channel, or place some comments or like the video. Anything would be appreciated. I think this content needs to be spread around more than people are seeing. If you have any other questions, let me know. If not, keep an eye on Apple. It's a market leader. And thanks for watching, and we'll talk to you guys later.